Hey everyone, in today's video, we're going to look at 10 stocks that have been skyrocketing since the Fed just decreased interest rates by 50 basis points. We're going to talk about this decrease in the interest rate a little bit and then go into each of these stocks. I'll give some thoughts on each of these stocks before going into a couple stocks and sectors that money really flowed out of over the last day or two. So I hope you guys like this video. If you do, be sure to give this video a big thumbs up. Helps a ton with the channel. So I just want to start here, kind of a summary of the interest rate cut by the Fed. There was lots of debate whether the Fed was going to cut by 25 basis points or 50 basis points. Ultimately, they decided to cut by the larger amount of 50 basis points. Seemed like there was some concern over job growth and they wanted to keep the unemployment rate under control. So they thought the more aggressive 50 basis point cut could kind of be getting ahead of it a little bit. In the couple days that followed that cut now, we're at all-time highs for the S&P, which is the largest 500 companies in the US, publicly traded. Generally speaking, it has to be kind of included. It's a couple intangibles in that. And the Dow 30 as well. The labor market, as I alluded to, still a bit of a concern, which is part of the reason why the 50 basis point cut happened. One of the things that was really interesting for me, I assumed since it wasn't 100% that it was going to be a 50 basis point cut, that when the cut got announced that the market would immediately go up. But it got announced on the 18th. We actually saw a tiny bit of panic weakness, and the stock market didn't really go up on the news immediately. And then obviously you see the next day it just went up a ton, about 2% on the S&P. On the NASDAQ, which has a bit of a higher beta, we are up over about 2.2%, over 2% today in the market. And, this has been one of the most talked about topics on Wall Street and in the investment community over the last month, 6 weeks. Will the Fed cut in September? It became pretty obvious they were going to cut, but then how much are they going to cut? 25 basis points, 50 basis points. So it always kind of surprises me when there's like a knee-jerk reaction almost, and then the next day after people have time to digest it, the market just skyrocketed when they really had a month to digest the essentially one of two options. So I just find it interesting that it really took the extra day, unless I'm missing something here, for the market to really digest it and price in that interest rate cut into the market. So we're going to go through some stocks that really just flew on this news and kind of talk about maybe why they flew and some other thoughts I have on these stocks in general. So the first stock here is Airbnb. Airbnb went up over 5% yesterday or today, I guess, on the news that interest rates were going down 50 basis points primarily. Looking at this stock, just for a bit of background, it is a bit of a higher beta name. You can see it's had some weakness with some other high multiple stocks in the travel space. Had a weak outlook. Stock dropped from 150 to the teens. So there's a lot of other moving parts here and some beta components going on. But yeah, up 5% on the day. Generally speaking, lots of the stocks on this list with maybe higher multiples just get a huge tailwind when interest rates go down. It doesn't really impact their business from a fundamental standpoint because lots of these companies that we're going to go through don't carry a ton of debt necessarily. So it doesn't save them a ton of money, but it really does help them justify higher price to earnings ratios because lots of the price today is made up of the net present value of future profits. And when you're comparing that versus what you can get on a T-bill or a 4%, 5% interest rate, if now you can only get a 2 or 3% interest rate, the comparable and the opportunity cost versus the net present value of the profits in the future and what you have to discount those cash flows to get the present value, it really completely changes the equation that lots of analysts value some of these stocks on. So I think that's what we're seeing here on Airbnb more than anything fundamental with the company. Another couple stocks that I think it's similar stories on, stocks like Tesla up 7% today, huge jump. And this is a massive company, $750 billion market cap, up 7%. That's over $50 billion of value created in Tesla just from having that lower interest rate. Now, I'm not as familiar with Tesla's business. Maybe they do hold a bit more debt, so it may actually provide them some tailwind on servicing that debt. But for the most part, this one has just been a high beta name that was primed to really fly as soon as these rates started coming down. So when they came down more than expected, that's the result you're seeing there. Just to take a look at this one, it's kind of wild when you look at the journey they've been on this year. In the past 6 months, Tesla's up almost 40%. So you'd have to think it's only 9 months into the year. They must be doing great year to date. No, they're actually down year to date because they did so terrible the first couple months of the year with lots of things going on. And there's still a lot of confusion going on in this stock. The robo-taxi network, they talk about humanoids, they have their energy investments. Elon Musk's a bit all over the place. So it's just a lot of stuff going on, a lot to sort through, and hard to make like a bet on one particular thing with this company. Personally, on this stock, I don't really have a conviction either way. At the end of the day, it's so many stocks in the market, so many opportunities, and you don't really have to swing at every pitch that gets thrown to you. You don't have to make a call one way or the other on Tesla. And given its pretty confusing story with lots going on, not really an expert or know too much about lots of the different businesses and ventures that they're pursuing. This is one that I just stay on the sidelines on for the most part, but it is one that is fun to watch. Going on to the next one, Meta. Meta's been up over 7% in the last 5 days, about 4% in the last day. And in my opinion, this one is totally just PE expansion off of, value of discounted cash flows into the future. They have no real reason to really benefit from interest rates decreasing directly. You can make the case that indirectly, if the economy gets a bit hotter, more demand flowing, more companies will be advertising, which may bid up ad rates and whatnot. But the other thing with some of these big tech companies like Meta, same thing goes for Google, Apple, they actually hold tons of money in treasury bills, and they're actually making tons of money on this higher interest rate. So if you have 100, 200, 300 billion dollars at a 5% interest rate, you're making over $1 billion a month in interest. If you have kind of that 200, 300 billion dollar number, which lots of these companies do, especially when we're talking about companies like Apple. So those rates going down from 4 or 5% to 2, 3% actually takes out billions of dollars of net income from their pocket. And then if you were to slap a 30 times, 25 times multiple on that, that is real value that they really have to comp in other ways through actual operating income. So you can make the case that for some of these companies, from an operating cash flow and net income standpoint, these interest rates going down could, from a direct standpoint or point of view, actually be a headwind. But I guess, just the overall value of the PE expansion from the net present value of those cash flows, and maybe some of the indirect tailwinds from the economy heating up behind consumer spending more if interest rates are lower, has been determined to more than offset that. At least that's what the market's telling us with that 4% jump. Caterpillar here, another one here up 9%. This one was one of the biggest gainers in the market, up 5% today after that cut happened. $180 billion market cap here. I always forget how big of a company this stock is. Looking at the 52-week range, this one's right there near its 52-week high. Doing a 5-year look at this one, almost at the all-time high there in that 380 range, more or less. So this one, another one, you get a little dividend, 17 PE, massive company in the infrastructure space, kind of construction equipment and whatnot, really flew today. This one's a bit interesting, Darden restaurant. This one was up over 8% on the day. Now, they actually had some news come out as well. This is, a company that owns different restaurant chains, including Olive Garden and whatnot. They actually had earnings that disappointed today, but they released some other news in their filings, particularly around a deal with Uber. So the investors, while the earnings disappointed, they really like the Uber deal. And the Uber deal pretty much stated that they will be starting to deliver nationwide in the U.S. products of Olive Garden starting next year through an exclusive partnership they have with Uber. So maybe that was a big untapped opportunity to get Olive Garden kind of delivered or to more consumers, or there was a lot of appetite for that, and they didn't really know the best way to come to that outcome. And Uber has successfully done this with a lot of other companies in these kind of partnerships and deals. So it looks like the market really likes that. Must be a huge driver of their business because this is a $20 billion company with tons and tons of different brands. So for Olive Garden, which I think is probably their biggest brand or one of them, to lift the whole stock 8% despite missing earnings, investors really like this partnership. So I don't really put this one much to the interest rate cuts, even though, it looks like it couldn't hurt. They directly interact with consumers around the country. So if they're feeling a bit more money in their pocket, a bit less on the debt payment side, a bit more discretionary income, it definitely can't help companies like this with these mid-tier restaurant chains. Next stock here is PayPal. So PayPal here up 6% on the day, another huge jump here. Looking at this one over the past 5 days, up 10%. Year to date on this name, up 26%. Looks like it just hit its 52-week high today. So on this stock here, I think they've been earning the market's trust back a bunch over the last year. They've had a lot of problems, especially coming off of the high of the pandemic. You can see the stock went over $300. Oh my gosh. And then right down into the 50s, so down about 80-something%. They're starting to drive more, consistency in their performance. They're buying back lots of shares. They have a new CEO that came in last year, I believe, that seems like he's earning the market's trust. And then once again, just when you're a profitable cash cow like PayPal, if you are being evaluated versus opportunity costs in cash, and that being part of the cash flow assessment of how much the current value of your company is worth, going out, discounting at the current interest rates of what the profits can be in the future, you just get a nice tailwind in your valuation, especially when you have a lower valuation like PayPal in the mid-teens for a tech company that doesn't really have a ton of debt, has started to grow again, and has really nice margins, has been buying back shares. So a lot of just demand for the shares on that front as well. So nice to see them get a nice little jump. It's been tough for lots of those investors in this name. But short term, last year, 27% gain, not too bad, despite, the more challenging mid-term performance on the stock, mostly just off of that 1 year huge drop they had. AMD here up 6% on the day. Similar story to some of these other tech companies with just analysts changing their models with the discounted cash flows. That would be my guess on this one as well, up 6%. Let's take a look at this one a bit more. Year to date here, up 13, up 56 in the last year. I'm honestly surprised that AMD is only up 13% on the year, given the sector they're in and the business they're in, relative to some of their comparables or indirect comparables. You think of some of those names that we're not going to get into right now, but I would have thought this one would be up a lot more. That being said, I'm not crying for any AMD shareholders. Up over 50% in the last year, 400% in the last 5. They've been absolutely killing it still. Salesforce here up over 5% on the day as well. Similar story as some of these other names. About flat on the year here. Last 1 year, though, up 25%. Past 5 years, up 70%. So they've done really well as a SaaS company long term here. They had some rockiness, as did lots of these tech companies that experienced high levels of growth during 2020, 2021. But they've rebounded super nicely. Look at that V. That's a sharp V. They actually look like they broke through their high. They're at 290, and then they went down all the way to 140. So they got cut in half, and then they doubled again back up to about 300. They broke through their old high, sitting at 265 today. Seems like fundamentally the company must be doing pretty well to have earned that bid back in their stock price. A couple last ones here that really jumped today. Alibaba up over 5% on the day, I think, or right around 5%. This tech company has been one that's lost lots of the market's trust over the last number of years. Also, just lots of risk factors holding Chinese stocks, exposure to the Chinese economy, lots of unknowns, politically, geopolitically, and whatnot. So this is one that has just been really hard to hold. And if you looked at the comparable and the valuation on a revenue multiple or an EBITDA multiple versus U.S. tech companies and comparable businesses, it's a huge discount, but it's just people do not really want to hold the exposure, do not want the risk. You've seen that in the stock over the last 5 years. It's just gotten absolutely hammered. down to about 88 bucks a share here today. But it does trade at a pretty high beta versus the market. So I think you're seeing that today with the broader market trading up some of these growth stocks, tech stocks. They're up 5% on that news. And last but not least, in terms of stocks that have been jumping, Apple up almost 4%. I just wanted to highlight this one because Apple is a huge company in so many different components of the economy, right? Obviously a consumer stock with their iPhones and some of their other products. But they just really touch so many different parts of the global economy. They have China exposure. They have emerging market exposure. They have, entertainment exposure. Can't even get into all the other things they're dealing with on services and whatnot. And even for a stock trading at a $3.5 trillion valuation, jumping 4% on an interest rate move is huge. It's over $100 billion of value being added to the stock off of a Fed decision. So just really interesting to see just how much capital, how much money flows around the market based off of these rate changes. Like everyone knew it was going to be 25 or 50. This didn't really surprise anyone to a great extent. It's not like it was going to be flat or no change and went to 50. This is stuff that to a certain degree should have been and was priced in. So to see this kind of volume and this kind of capital move around is just really interesting to see. Now I want to just talk about a couple of stocks that money flowed out of. And some of them were interesting to me. A couple of them were the REITs. Now, the REITs have been absolutely flying the last handful of months. You see here, Realty Income, one of the more popular ones in the US, went from around 50 bucks a share in May all the way up to 62 bucks just the day before the interest rate decrease. So up 22% in 3 or 4 months, and that's on top of the 5.5% dividend that this one has been paying. So you've made 25% return in 3 months, 3.5 months. So maybe it just got a bit ahead of itself, but you'd think out of all the companies we talked about, the ones that actually benefit the most fundamentally from interest rates going down in a very direct, very immediate fashion are companies with very high debt loads and almost have high debt as a component of their business or just as a cost of doing business. So think like telcos, think REITs. These companies have huge debt ratios on their businesses because they need that debt. They need that leverage to drive return for investors. And to see those stocks really get hit really speak to just the amount of appetite there are in some of those higher multiple names to get back into. Lots of this money I don't think came out of Realty Income because people were worried about what's going to happen with Realty Income with lower rates. I think the actual answer to that is it's good for Realty Income. They're going to have 0.5% more margin on all of their holdings between their cap rate and their debt costs. So this is actually a huge profit tailwind for them. And they're already paying a 5% dividend yield. So it's just going to create a lot more cash flow for the company to, invest in more properties, deliver more funds from operation per share. But it does not offset or does not equate to the opportunity that the market's obviously seeing in some of these other names like Airbnb and Tesla that may have been held down because interest rates have just been at such a high level. And when you look at their profits on Tesla for 2030, 2035, and you're saying, yeah, but if I just took that same $1,000 or $1 million and invested at 5% compounded over that time, is it really worth me paying, $260 a share, $250 a share? And as that number comes down in terms of what you can get alternatively, I think they're saying, yes, now it is more worth it to pay, $240 a share, $250 a share than it may have been a couple months ago. And I think that's just what we're seeing come to life, despite the fundamental tailwind it is for some of these other stocks. So you see Realty Income here down 2.5% on the day, 3.5% on the week. Vichi's another one down over 3% on the week as well. Going to some other kind of industries with high debt loads, you see AT&T here down 2% on the day. Let's check out some of the other ones. Verizon, weirdly enough, is actually up. So maybe they have something else going on. Another spot that got hit was consumer staple companies. You see Coca-Cola here down 1.6%. We see, let's go on some other ones, PepsiCo down a bit less, 0.3%. P&G down 1.4%. We'll go Colgate down over 1%. So these are stocks that, similar to some of the other names we were talking about, directly benefit from consumers having more money in their pocket. They have a direct relationship with those consumers as they're going to the store, as they're buying cleaning products, as they're buying soft drinks. If they have that extra $50 a week or whatnot, they may be more willing to make that impulse purchase or trade up to a more expensive offering. And despite that interest rate cutting and some weight being lifted off those consumers' backs, the market still says, you know what, this money may be better served in those growth stocks with, that valuation equation, looking at the cash flows into the future, getting a bit more attractive versus, the price that it was with interest rates at 4 or 5%. So those are some of my thoughts on, where the money's been flowing over the last day or two. Still perplexed transparently on how this stuff doesn't happen right away. And after months of thinking about it, investors or Wall Street still needed to think about it one more night before bidding the market up 2%. But it did bounce back, and it bounced back in a huge way. So I'd love to hear your thoughts in the comments. Have you been buying any of these stocks? What do you think about, the jumps in some of these stocks, and inversely, the hits that some of these other stocks like Realty Income, Vici, Colgate, etc., have kind of got hit with just in the short term on the day that the other stocks popped? Let me know in the comments. If you like this kind of content, be sure to give this video a big thumbs up. Helps a ton with the channel. Thank you guys so much, and I'll see you in the next one.